Hello, my dear guests and audience. It is a great pleasure to see you all here and welcome to our Impact Livestream. Consider hydrogen a strategic asset allocation. It's now the time. I'm the moderator today, Cheryl Yu, research analyst from Leader Associates. Well, first, let me give you a brief overview of how we interact here. You can find the chat box and Q&A functions below. If you have any problems, you can use the chat box and our colleagues will check them in real time. And if you have any questions to our guests, you can use the Q&A function. Well, our topic is set to be linked to Connecting Green Hydrogen Europe 2022. It is the leading green hydrogen conference and exhibition in Europe, committing to accelerating Europe's green hydrogen economy, market, and production. CGHE 2022 brings key decision makers from all green hydrogen value chains together, discussing the future of hydrogen economy, and we look forward to your participation. Well, first of all, I would like to welcome and thank all of our webinar participants here, Ms. Aida Sitdikova, Director, Head of Energy, Eurasia and EBRD, Ms. Kajsa Ryttberg-Wallgren, EVP, Head of Business Unit Hydrogen, H2 Green Steel, Ms. Eva Hennig, Head of Department Policy Issues, Thüga, and Mr. Thomas Engelmann, Head of Energy Transition, KGAL, and Mr. Craig Knight, CEO at Hyzon Motors. Well, my fellow panelists, please turn on your cameras and voice. I will then ask you to introduce yourself briefly and tell us which segment of the hydrogen industry chain you work in and what your perspective focus is. And have you already made any solid investments in hydrogen? Well, let's start from Aida.
Thank you, Cheryl, and good morning to all. EBRD has started looking at hydrogen in 2020, and we started to looking at the policy level of supporting green hydrogen investments within the region of EBRD. From 2020, we stuck to our usual business model of driving the policy engagement, which is creating the enabling environment for hydrogen, but also considering actual investments and financing. We're in the process of developing a few opportunities specifically in the North Africa, in the MENA region. And we think that as EBRD is helping to create the environment for all investors, as we're working with the governments, as we're researching the hydrogen potential in our region, the investments will be coming quite fast and on a large scale. The bank is running a big multi-country study, top-level review of the potential for green hydrogen demand in our countries. And this would also help us to actually finance these projects. Thank you.
And Kajsa?
Thanks a lot for inviting me to this webinar. My name is Kajsa, and I'm calling in from Stockholm in Sweden. I'm heading up the Hydrogen and Green Iron division at H2 Green Steel. H2 Green Steel was founded only about 1.5 years ago, and our purpose is to decarbonize hard-to-abate industries, and we start with steel. We are currently building a 5 million ton green steel factory in the north of Sweden that is enabled by 800 megawatt electrolysis to feed approximately 105,000 ton green hydrogen per year into the next step in the process, which is the iron making, direct reduction. This brings down the CO2 emissions by 95% compared to the traditional blast furnace route to produce steel. Our ambition is to have our first customer deliveries in 2025. But in addition, we have already announced our second project, which is a collaboration with renewable energy company Iberdrola on the Iberian Peninsula. And our joint plan is to build 1 gigawatt green hydrogen production to feed into 2 million ton green iron site. And this is to really accelerate the transition in the European steel industry. Happy to be on the call.
Great, thank you. And Eva.
Thank you very much for having me here. My name is Eva Hennig. I come from Thüga. It's a group of companies where I have 100 utility companies all around Germany, all dealing with gas, electricity, district heating. So I'm coming just from the opposite side of the table today. And we started with hydrogen with our first electrolyzer in 2013. And since then, we've been working on the topic. Our biggest issue is to decarbonize the gas grids. So we are working heavily on the transition of the existing distribution grid. So we only have distribution grids in Germany to convert them to hydrogen. We have many smaller pilot projects which are now coming successfully into the starting phase where we convert a small grid to hydrogen with existing heating customers. So for us, the heating sector is important, but we also work on the transition of areas where we have a lot of industrial consumers and fueling stations to build up a grid there and to connect hydrogen producers, because in Germany we will have lots and lots of smaller hydrogen producers which will be connected to the gas grid. And for us, the most important thing is that we have a stable regulation for that, and that policymakers are speeding up a little bit, because we look at it as we are in the front of a wave which is coming over us now. Lots of hydrogen coming in. Thank you very much.
Thank you, Eva. And Thomas.
Yeah, hello to everybody. KGAL and myself, KGAL is a typical asset manager and financial asset manager. We invested the last 15 years heavily in renewables. So we never touched the basis on fossil-related fuels. That means we were always investing in renewables. Additionally, we hold real estate and aviation. So both sectors or both off-takers in the future also someone need to decarbonize further. In our sustainable infrastructure team, for sure, we're going to look for projects all over in Europe where we can invest. So we are, let's say, a typical intermediary between investors on the LP side, limited partners like huge pension funds, insurances, and so on. And we are the specialist for making participations in projects, what you potentially know from the offshore wind market, where a couple of 2-3 shareholders are investing in a project. We always hold between 15 and 20 billion assets under management, and we are really focusing on real asset investments. So we are equity provider going into projects also during the development phase, hopefully after FEED study. That means we want to see who would the potential off-taker and so on. And this is the reason why our fund is called Green Hydrogen Fund, even if we look also for derivatives out of green hydrogen. But we think that the molecule and the ramp up of that stuff of green hydrogen will make tremendous change in a lot of industries. We would, at the moment, we also think to go downstream, or we have the opportunity to go downstream. The point is, if you go downstream, and it's very interesting to hear what Kajsa is saying, you take a different risk, because you take then the steel risk, for example. You have to be clear, what does it mean for you in the investor scope? But in a nutshell, we as KGAL are prepared to invest the next 5 years up to 500 million euro as equity partners during development phases already in projects, also in pipelines. But we see at the moment the pipelines, or the real hydrogen pipelines, are in the discussion how they're gonna be, are they regulated, non-regulated, and so forth. Thank you for having me here.
Thank you. And Craig?
Hello, everybody. Great pleasure to be here representing another seat at that table that was referred to earlier. Obviously, judging by the image behind me, Hyzon is most interested in trucks. So we are a developer of fuel cell commercial vehicles. So the parent company of Hyzon started working on core PEM fuel cell technologies almost 20 years ago. And after many years of R&D and commercial application development, we settled on heavy commercial vehicles as the most interesting application for our technology in terms of making a positive contribution in the world. And as everybody online, you know, is possible.
Oh, Craig?
We don't hear you.
We couldn't hear you.
Can you hear me now?
Yes.
How about now?
Maybe now it's okay.
Something funny going on with the Bluetooth. I don't know what happened there.
Yeah,
it muted me, and it kept
okay.
telling me it was muted, even though I was clicking the unmute thing. Sorry about that. So what I was just going to say is concentrating on the heavy mobility sector within transport means that we are targeting the sector of transport which contributes well above its weight in terms of emissions, if you like. So while heavier vehicles are usually 5% of the vehicles on the road in given jurisdictions, they usually account for 30-odd% of transport emissions. So they are big contributors to our carbon problem, and the decoupling of transport from fossil fuels is obviously part and parcel of the greater decarbonisation challenge, in addition to steel and other big consumers of energy or hydrogen. And we are here to accelerate the rate at which governments and corporations can choose to go to zero emission commercial vehicles. Okay, sorry about the sound problem before.
It's okay, technical equipment always happens something. Okay, and I would like to thank you for your support and participation again. And now let's start our discussion. Eva, we know that Thüga is an alliance of utilities that acts as a link and guarantees the supply of hydrogen. So do you think the production and transportation of hydrogen have matured to the point where other end areas or end users can fully commit to the use of hydrogen energy?
Thank you very much for the question. So let's start first with the transportation of hydrogen. As we are operating grids, of course, we see as transport or most efficient transport of hydrogen in large volumes. We see the grid, especially when you think about cities. We have projects with buses and with waste trucks. And this means that they have to be refueled in the middle of the city. And for them, it would be the best that they get the hydrogen directly from the pipeline. The grids that we are operating are over 90% already hydrogen ready today, which means we don't have to do a lot of investments to convert them to 100% of hydrogen. This is the work which is already starting now. I know that the image is you cannot convert steel pipes to hydrogen, but that's just not true. So there's a lot of research which has happened in the past few years to get the knowledge together on this. At the distribution level, it won't be a problem. Now we have to look at the customers, and every customer has his own timeline. And you cannot just show up at a customer and say, okay, I have the hydrogen and you have to jump. It has to be a coordinated program between the grid operators, the injectors of hydrogen, and the off-takers of the hydrogen. And this is why we have, for Germany, we are developing a strategic plan within the industry to make sure that we understand where is the hydrogen coming in first. We think at the Northwest. Now the hydrogen backbone, which is one of the major issues that we have. What is the speed of the European hydrogen backbone? Where does it go? And when does it go there? Because then we have to combine the local production, which is then injecting into the grid, maybe in the beginning with blends, and then the offtake from the hydrogen backbone, which is then the security of supply. And this we have to combine now with the needs of our industrial consumers, especially and the CHP plants, because they probably will be the first ones to say, we want to have hydrogen, and to make sure that we can bring them the hydrogen from wherever we get it injected or where we have the connection to the hydrogen backbone. And I think industry, we just had this morning the news from Bavaria, where I'm coming from. The industry has a huge interest in hydrogen, and it has been speeding up since this horrible Ukrainian war. I think it's doubling the speed of the development now. And we have to make sure that if we deliver hydrogen to a customer, that we have a security of supply level that they are used to, because you cannot deliver hydrogen to a glass industry and then suddenly say, oh, the wind is not blowing, so I cannot deliver you the hydrogen tomorrow. You have to have backup. You have to have storage, underground or above ground storage, and you maybe also need to have a backup production with another resource. So this is what we are working on, because security of supply is one of those pillars that our energy system is built on.
Okay, thank you. That sounds very good, but with the spread of hydrogen energy, it seems to be able to reshape the energy landscape and turn it into a circulating currency. So how does Thüga actually understand about the circulating currency?
Sorry, I did not get your last question. You're breaking up.
Pardon it. I mean, with so many plans, the spread of hydrogen energy will be very prospective. So it seems to be able to reshape the energy landscape and turn it into a circulating currency. How does Thüga understand about this?
Okay, so for us, we have two aspects in here. The first one is that we have existing assets in the ground. So this is the most important thing, because using existing assets is the most efficient one to bring them into a future. And it's the fastest one to bring hydrogen to the customers. The second part is in investing ourselves in the production of hydrogen. Which is new to us because we never ventured in the world of producing gas. We have small biomethane plants, of course, but the production of hydrogen is another thing. And we are just discussing now which level of production are we looking at? Are we looking at being a partner in a larger production site, or do we go into the smaller production sites, let's say, which are connected to our grids, which probably will be 5 to 10 megawatts. And we have a renewable daughter company. They have been investing in wind and sun so far. And of course, this would also be one way to go into the decarbonization effect, to also invest in bigger projects as a joint group, because you have 100 companies which are interested in that part. And I think now we are still lacking, and this is our problem in Europe, we are still lacking the regulation for this. And the gas package is in discussion, so the gas cap package will still take some time. And until the gas package is done, I think investors are a bit hesitant, especially when you don't talk only about renewable hydrogen, but if you talk about low carbon hydrogen. We have a research project for turquoise hydrogen with the pyrolysis, which is in the making, because we say to depend only on sun and wind, especially in the south where you don't have enough renewable electricity production in Germany, we need to have another source, and the pyrolysis from waste or whatever you can do the pyrolysis with would be a stable injection of hydrogen. So those are the investments that we could see in the future next to investing into the grids.
Okay, then I think you have many experience with the hydrogen. So what is your normal expectation of the payback ratio on hydrogen projects?
Actually, this is a question that probably nobody can answer at the moment, because we don't know where the prices will go. If you would have asked me about a year ago when we looked at the gas prices, then the gap between the hydrogen price and the gas price was huge. Now at the moment, when you look at the last forecasts on where hydrogen prices are going, they are steep declining. And
where gas prices now.
Yeah, and gas prices were hitting 103 euro per megawatt hour this morning. So the payback time of the investment can be very fast, especially if the industry is now picking up. 1 year ago, the industry was very hesitant, because the first question we always ask, what is the price? So we need to have a stable price that they can believe in into the future, because the investment for an industrial consumer to switch to hydrogen, they have to reinvest into their application, is quite large. And they will only do this if they have the security that the hydrogen will flow and that they will be able to pay for it. And this is why contract of difference, one of those buzzwords floating around at the moment, I think is the door opener to them, because then they have stable prices. So payback times in the grid industry is a lot longer. We are used to have payback times which are 40 years, which is totally different to those people who are producing something. So I have a different take on it. If I have the security of having hydrogen for the next 40 years, I'm safe as a grid industry. But we need to have the rules. You don't invest if you don't know whether you can sell the product afterwards. And this is why this is important.
Okay, thank you, Eva. Well, then Kajsa. Well, in my point of view, it is very fair to say that H2 green steel is very courageous, because in the traditional metal industry, the energy transition is usually a very slow and reactive process. So what qualities did you see in it that made H2 green steel decided to start to make green steel straight away?
No, thanks for the question. It's quite it's a good one. So basically, to take you back a bit when it all started, like I said in the introduction, the company was founded about 1.5 years ago, and our founders, Vargas Holding, is also the founders of Northvolt, a large battery cell producer that has recently produced the first product out of the gigafactory in the north of Sweden. So they were at the board meeting, our founders, for Northvolt, and they discussed with another main shareholder that is from the automotive industry. It's not only about actually decarbonizing the fuel part of a car, but how can we decarbonize how the car is made? And if you look into the CO2 emissions there, you see that steel is one of the most polluting parts. It actually represents about 8% of global CO2 emissions and about 25% of the emissions from the industry in Europe. So it is significant. Then they also realized that the technology to produce a carbon-free or very low-carbon steel is there. It had been tested in the market by another Swedish company. So the technology was actually quite mature to do it. And it was decided then, we don't need another pilot project for this. We need a large scale project that can prove that it's possible to do this in a financially viable way, to have a bankable case and start the transition. In addition to this, and because that's on the technology side, we also tested the market. So because a little bit what Eva talked about, there must be a customer who's willing to pay a little bit of a premium, at least for a period, to make this possible. So we tested the market, started with the automotive side, and we could actually see there is a strong willingness to pay a premium for a green product. We are now in our B round of financing, and to have this customer offtake agreement in place is a fundamental part of how we get finance. So we are today in our first phase, which is going to be 2.5 million ton. First customer delivers in 2025. We have pre-sold about 50% of that volume already on term sheets, where we have a premium from 20 to 30%, depending on the product, or above kind of a more of a brown steel type of price. So the answer was yes, there is the customer who's willing to pay this. But this is also the reason for why you could say we are building also the steel mill, because the polluting part in steel making is actually not the steel mill, it is the blast furnace, so the iron making part. And one could say, so why don't you just produce green hydrogen, green iron, and feed that into the steel market? We believe that in order to really accelerate the transition and understand what is the green steel price that a customer is willing to pay in the market, we kind of had to build all three platforms. And this helps us to understand the value of green iron and what price we need to reach, or the cost level we can accept for green hydrogen production. On top of this, we are based in Sweden. North of Sweden is a perfect place for making green steel. We have an abundance of green electricity. We have a base load, because some other comments in this call, yes, you need to have stable production. When you make green iron, you need to have 24/7 flow of hydrogen. So we need the base load, we have the hydropower, there's a lot of wind coming into the market, and there's limited connectivity or a grid connection between the north and the south of Sweden. So it's basically landlocked electricity that we can use. In addition to that, of course, there's high-grade iron ore available in the region. So it is a great place to produce green steel. So basically, that's kind of how it all started. And we really thought that the world doesn't need another pilot. It needs real volumes that can be delivered.
Okay, thank you. And currently, I have saw a lot of steel companies have signed several hydrogen-related cooperation agreements. So is their role in this merely as off-takers of product, or will they be involved in early production projects?
So I think there's a mix. What we did notice before the war, so to say, is that there were a lot of announcements in making these direct reduction reactors where you would use natural gas to reduce iron ore to iron. That is still a polluting process, but much better than using the blast furnaces, basically. That said, how that will be influenced now with the natural gas prices that we have is going to be very interesting. Our view, I mean, we are not into that natural gas part. We are 100% based on green hydrogen. So for us, it's more, I would say, maybe an accelerator for some companies to explore green hydrogen instead. That said, when you look at green hydrogen production, obviously you need a lot of green electricity, a lot of electrolysis, and you could ask yourself, do you need or should you have that in Germany or Poland and Benelux, for instance? Does it make sense to dedicate 10 terawatt hours green electrons into making that when you maybe could make it in places where it make more sense and basically distribute green iron instead to the plants? That will require a completely different view of the value chain. And that's, I understand that is a challenge for the traditional steel makers, but we are really here to challenge that and show what is possible and show that you can think in a different way.
So where do you see the future investment potential in the green steel industry? Which part of the value chain?
No, I mean, I see that where you need to invest to really decarbonize the steel industry is you need to replace blast furnaces. You can't continue to do that because it's super polluting. So you need to invest in this DRI or direct reduction process. We believe, like I said, in doing that with green hydrogen. To make it cost efficient, from what we see, you need to have green hydrogen production door to door with the green iron production. So it's just a direct feed. So that's our focus, large scale green hydrogen production for direct offtake. When you start to distribute the hydrogen, at least as of today, it becomes more expensive and then you don't have a bankable case. Yes, you can subsidize it, you can get grants for a time, but to have it, you really need a lot of green electricity at a cheap price to make it happen. So you need to invest in that in the places where it makes sense, which for Europe, we believe is the north and the south. And that's why we have projects in those regions, because it's really about ring fencing the best locations for green hydrogen production. Then, I mean, if you look outside of Europe, you are basically following the same pattern. So where can you produce green hydrogen at a low price with a stable baseload? Because at least as of now, and maybe until 2030, large storage is too expensive. Again, back to the bankable case. So then you are looking at maybe at Brazil, you're looking at Chile, Canada, and then of course you have Australia. It's interesting from a green hydrogen point of view, but a little bit more challenging for high grade iron ore. Yeah. And okay. Another part of the value chain, but that I didn't mention. So the steel mills, they basically need to invest in electric arc furnaces to be able to use DRI or sponge iron and combine that with scrap. So you would probably see also increase in demand for scrap globally.
Yeah, thank you. And Craig? Well, Hyzon Motors is very much invested in the hydrogen fuel cell transportation sector, I think, where we are now seeing hydrogen technology has an increasing advantage in the mobility sectors, especially like the trunks you mentioned as the buses, railways. So how do you see the future of hydrogen in the transport sector?
Yeah, thanks, Cheryl. In our view, the heavier vehicles with very high usage models, high daily usage models, could be some of those applications you mentioned, like also like trains, for example, which is not an on-road application, but it's a similar. It's also mobility. But trucks that are used, one or two, well, at least 2 driver shifts a day, for example, are a good use case where they don't have an opportunity to charge if they happen to operate on batteries. So as you seek to decouple commercial mobility, trucks, buses, and so on, from fossil fuels, trying to electrify those use cases, you have to look at what the use model is and what the criteria for the successful operation is. And frankly, the architecture of a fuel cell vehicle enables you to replace a diesel vehicle quite easily. Gives you similar kind of usage characteristics, similar kind of range, similar payload, similar fill times. The whole use case is kind of unchanged when you go from diesel to hydrogen, because the fuel cell vehicle also separates power from energy the same way a traditional vehicle does. The power is designed based on the fuel cell. And so the fuel cell. My technology issue persists. Can you hear me now, Cheryl?
Yes.
Hello?
I can hear you now.
Okay. Sorry, I'm having an issue with the headset. It's clearer, but for some reason it keeps muting me every now and then. So the way that the vehicle works is that the fuel cell and the motor determine the power, so the kind of payload carrying capacity of the vehicle. And then the range is determined completely separately by the fuel tank, the hydrogen storage. So the vehicles function very much like diesel vehicles. And that's why fuel cell vehicles readily replace diesel vehicles in many, many use cases. Hyzon's only focused on heavier commercial vehicles because we believe that most light vehicles will move towards battery electrification and will be more suited to battery electrified solutions, where you don't need to have 5-8 tons of batteries, for example, for lighter vehicles, but you really do for a heavier truck. So we're focused on heavier vehicles with high daily uptime, and we think that that's a slam dunk for hydrogen. And we love to hear about these industrial applications and gas grid decarbonisation projects around the world, because these drive the economics on the supply side for hydrogen. So in building vehicles and supplying vehicles, we're obviously contributing to the demand side of the hydrogen equation. But in fact, trucks only become attractive when the total cost of ownership of the vehicles, which is the vehicle and maintenance package and the fuel together, when those total costs become, similar to diesel trucks, then it becomes a very compelling proposition, and the tipping point is reached in transport. We believe that will happen extremely quickly once hydrogen is produced at scale. Sustainable hydrogen is produced at scale. And we're very excited to be working on a whole raft of different vehicle deployments in different countries around the world, 4 different continents at the moment we're active in. And we are seeing the cost curve on hydrogen come down, just as we were discussing in some of the pre-webcast comments. And we do believe that we'll very soon reach this tipping point where it just doesn't make any sense to use a truck powered by diesel.
Right. I think the future of hydrogen vehicles are very bright, but I think by now it is not as popular as the electric ones. So what else do you think the market can do to enhance the hydrogen fuel cells commercial appeal?
Well, obviously, passenger cars are the big use case for electric vehicles right now, and passenger cars are usually driven for less than an hour every day. So that's not a low-hanging fruit application for fuel cells. We go after those heavy and high daily utilization types of vehicles because
that is a utility model that really suits hydrogen, and where the advantage of the fuel cell vehicle is of some value. You can use it 20, 24 hours a day if you want to, because you refill them in 10, 15 minutes. So we have to go for those applications where the vehicles are heavily used. The second thing is that what Hyzon does is focus in the early stages on local vehicle usage scenarios or back to base types of models, where you don't need to wait for a national or international network of stations to pop up to be able to use your trucks, you know, with convenience. You're using it in use cases where the vehicles always come back to a central depot, or they always come back to some kind of loading facility or whatever. So these vehicles can be fueled very easily on hydrogen. And then what this will do, when coupled with some of those lower cost economics on hydrogen that comes about through investments in at scale hydrogen production to support not only mobility, but other hydrogen use cases. Once you have those compelling economics and you have these hubs of fuel cell vehicle activity around the hydrogen production, then you drive really strong economics on the vehicles and on the filling stations and on that use case. And you can join together these types of hubs across countries and across, you know, continents, for example. So in our view, it would be, you know, very useful for specific policy support targeting some of the use cases of vehicles that would see the most rapid uptake of heavy vehicles. It would be good to see that policy support directed at the use cases that are really the closest to commercial viability, which in our view are the back to base types of models, because with a handful of hydrogen filling stations, you can operate, you know, 1,000 trucks, for example, which you cannot do if you're trying to create a network across a country or a continent.
So you mentioned fuel cell technology, refueling stations, and there may be other compression technologies. What kind of investment opportunities do you see in this sector? Where they need to invest most?
You were talking about compression and dispensing?
Oh, yeah. I mean, which part or which sector you think they need the money most? It's fuel cell technology or refueling stations or other technology or other.
Actually, I don't think you should incentivize the development of the technology directly. I think you should incentivize the uptake on hydrogen, because companies like Hyzon are investing heavily in our technology to differentiate ourselves in the applications that we work on. And likewise in the entire value chain through the applications of hydrogen, we're all working hard to develop and create, you know, solutions around our technology. And if there's demand for the hydrogen molecules, then, you know, economics will take care of the rest. You know, the natural rule of commerce will take care of the rest, in our view.
Okay, thank you. And Thomas, well, I think KGAL, well, is investing in the real estate and infrastructure sector. So I assume people are probably waiting for the money you have in hand. So do you think that the current infrastructure for hydrogen energy is in line with the progress of development?
Thank you, Cheryl. What I have to say here is we can go up, mid, and downstream. And what we realize is very often that the logistic chain is somehow a huge problem. If you're going to produce hydrogen and you want to distribute hydrogen to another location, then very often the question is, what is the add-on price and what is the add-on energy vector, what you're going to use in order to bring the demand side and the supply side together. This is normally a typical work of pipelines, is a typical work of infrastructure. Unfortunately, if I would go to Thüga and say, where is your pipeline and gonna connecting, they say, we don't have one. You can go in with CH4, which is also attractive potentially in the future if we can make synthetic gas out of it, and here biomass for something like an add-on where the C molecule can come in could play a very interesting role. But in a nutshell is for us as investors, we want to see the whole business case. Where is the production coming from? Where are the electrons coming from? So I highly appreciate Kajsa saying we only look for green hydrogen. So we are facing the same situation. We look only for projects where our investors, our clients can go for impact sustainable and SFDR Article 9. This is a fund, what we're gonna have. This means we have to really show how much of CO2 can be, or decarbonization targets are in a project. So from that point of view, we look from that angle in a project, and then we look into the whole value chain, and then we realize sometimes where is the issue on the value chain. We would not go so far in this area that we would invest in a ship for bringing, for example, hydrogen from A to B. This is not the focus we have, because we are looking more for the infrastructure and for the upstream on producing hydrogen. Because at the moment, for producing hydrogen, you need a lot of green electricity. And this is exactly the combination where we come from, where we think we can support the market by getting projects in place, supporting projects during the development phase already in order to come to financial close. Because the projects at the moment are at a status, for example, Aida from EBRD, if you look from a non-recourse project financing into a deal, the projects are not in this status, in this quality so far. What we have to do now is to have to really make a de-risking of the development projects that they come to financial close. And this is the value chain where we look into. And then we are very, I would say, open in which part we're gonna invest into. So you heard something about the industry. Kajsa is related to the industry. Craig is related to transport. We have the chemical industries. Potentially, if Eva is saying we need supporters also to invest into a completely new hydrogen pipeline, also this is of interest. So is it Europe the basis, or is it more interesting to invest in outside of Europe, where the prices of electricity are cheapest? But then you have another problem of political risk. You have then FX risk. That means foreign exchange rate risk. So all of this in a nutshell is what we look into. And for sure, we as more infrastructure investors, we would love to invest on the upstream, midstream side. If we go downstream, and I would say, Kajsa, you would see your part more as downstream already, because you really touch, if you have produced iron ore, you cannot say, I'm gonna sell it back to Craig and he can go for the transport market. So you are already then plugged in a specific market. So for us as KGAL, as for our fund, we, let's say, would love to go upstream, midstream, and sometimes from time to time, we look also for downstream related projects where the business plan and the business logic makes really sense. And here for us, the most important part why we invest in hydrogen is not the molecule. It's not the sexiest of the molecule, is why we want to decarbonize the environment. This is why we look into hydrogen so heavily.
Okay, thank you. But actually, I've seen many investors or even consultants in the market. They say that it will be not economical for hydrogen projects until 2028 or 2030. So from your perspective, do you think we maybe wait another 5 years, or we can go into the market and where the early investment pay off more in the long run?
I think here we have really a chicken egg problem, because the industry wants to invest in the electrolyzers and so on, but the demand is not there. The demand, on the other hand, says the price of hydrogen, green hydrogen, but sometimes also blue hydrogen, is not, like Eva said, at the market compared to others. But what I think is from the overall, in particular in Europe, from the overall society, we have to think on the problem differently, because what is the price of CO2? So if you would integrate in an hydrogen project, the negative costs, what your demand side is saving, if the CO2 have a certain price, then you would not discuss anymore about the pricing of hydrogen alone. But it's at the moment not the case. And this is the reason why we discuss about subsidies. If I'm saying about CFDs, that we get a certain kind of a realistic chance to sell long-term to a demand side, to an off-taker green hydrogen. So we are not in the money, but I'm not looking so much into that, because I can give you, if you look for hydrogen, just as an example, what would you do if you want to invest like an oil and gas industry into a gray hydrogen market? And you realize somewhere in 2015, 10 years, you never know when, the green hydrogen market will go break even. But you have to invest in a technology which is based on natural gas. And then you make your political assessment of where is this gas coming from. Russia potentially not so attractive anymore. Where is it coming from? And you have to invest also into blue hydrogen related infrastructure technologies. That means you have a high risk that you invest now in the market gray hydrogen project, but in 5 or 10 years you're gonna face distressed asset risk. And this is a part where we believe that we're gonna go stringent and very clear to green hydrogen. This is why you see back end on my side the electrolyzers. We want to see that the electrolyzer business is coming more and more, that the fixed costs are coming down. This is in which direction we go. And for the next 5 to 10 years, yes, I believe we need from one or the other project, it depends, certain kind of subsidies or a different market, let's call it structure, because the CO2 price is, let's say, the boundary condition of is the price for hydrogen acceptable or not? If you look for the transport sector, Craig, I think the Renewable Energy Directive 2 gives already a huge push into the market of the transport sector that they have to decarbonize further. This is the reason why most of the transport and business car vehicles, the electric vehicles push came into the Volkswagens and so on, because they realized they cannot go on with the old combustion chamber market any longer.
And to that point, Thomas, the value of hydrogen as a fuel in a truck is very different to the kind of burning value of hydrogen in a pipe. So it's one of the reasons why we feel that trucking can provide part of that impetus around early adoption. As Thomas was saying before, you know, it's kind of expensive to invest very early on the curve, right? But if we have other sectors like steel leading the way and pushing green steel into applications where end users are willing to pay a premium because the steel value in the end product is not, for example, ridiculously high, like in luxury cars, and then you add these demand scenarios, then mobility is definitely part of that, responsible for somewhere around 25 to 30% of global emissions, depending when you measure it. Transport's major, and then the contribution of the heavier trucks to that overall transport impact is large. So we feel that heavy mobility is a great demand case for project developers and the investors that Thomas was talking about before.
Yeah. I highly appreciate, Craig, and I completely say the same. The point is for us as investors, and potentially Aida can say also something about that, if we know that off-taker prices are going to go down, that means we have huge capex now to invest. That means we have to be sure that our off-taker contracts are as long as possible in order not to come the second, the third time already into competition with completely new prices which come into the market in 5 or 10 years. This is a little bit the part where we need these long-term off-take agreements in order to attract debt-related banks and so on also to these projects.
Okay, thank you, Thomas. Well, Aida, would you like to add something to this question?
Yes, thank you very much. I think from our side, we see green hydrogen as part of energy transition. It's part of the low carbon pathways for the developing countries where EBRD is working on. And we believe, it would be an important part of those low carbon pathways for the energy sectors and economies because of the things that this great panel has already into its price of carbon. All those countries will be facing CBAM by 2026. They will have to decarbonize their exports. It's also the fact that green hydrogen can potentially present an energy vector that is less susceptible to geopolitical turmoils, to price volatility, as we see in the fossil fuel industry. So the future, in our view, is very bright. And maybe Thomas mentioned 5 or more years. we actually believe in a shorter time frame. I haven't mentioned, but we financed CCGT last year, which is partially hydrogen compatible already. So it's coming across many industries and sectors, and it's great to see people here from representing steel, gas networks, transport. It's really exciting. I do know that it's all very pretty much focused on the developed side of the world, whereas our region provides opportunities, but also challenges, of course. And in that sense, places like North Africa, for example, or Central Asia, could be that hub for scale up of renewables to produce green hydrogen, to potentially export it, or decarbonize sectors in those countries. In that sense, we're working very closely on certificate of origin systems on the policy dialogue side to ensure that exporters and producers and manufacturers can have a way to show that their energy is coming from green sources. But overall, it's just the point, I think, of scaling up. I hear the point on that Kajsa was making on the scale. Yes, we do need scale to make hydrogen commercial, to make low cost, to hopefully follow the trajectory that we saw on renewables. But in our region, it's important to have the first few demo projects, maybe at a smaller scale, but something that will test the corporate offtake, for example. We are working in North Africa. We're developing a project for the fertilizer producer in green ammonia. And it's really exciting with a renewable developer combining forces with the manufacturer. And it's really exciting part of things because, I mean, really renewables and electrolysis, these are long-tested technologies. These are things that have been around for quite a while. From a lender's perspective, it's more sort of the interface between the two and how you put it into a bankable format. And to put it in a bankable format, we would usually be looking, of course, at the market risk on the end product. We would be also looking at the long-term offtake, ideally, while helping the government helping the countries to create demand for those. So having those, but really relying for scale in the developed side of things. Places like Sweden and Germany hopefully will lead the way. In terms of the regulatory setup and support, we do think that maybe at this stage, subsidies will be, some level of subsidies would be required. CFDs were mentioned. I don't know if it's going to be the sort of feed-in tariff scheme, but some level of subsidies would be required before costs will reach the level sort of parity with the alternatives, where we can have purely commercial market for green hydrogen. So I would just maybe finish on that and stress that there are so many applications, including, for example, for the scale up of renewables that the EBRD is actively pursuing, and maybe addressing the intermittency of renewables. So it's a self-perpetuating decarbonization effort where green hydrogen can be a big component of. So it's from blending with natural gas in networks to decarbonizing heating. In our countries, you have to burn something to heat. It gets to -30 in winter, -40. So, and at the moment it's coal. It's blending, it's decarbonizing hard to abate sectors. It's such a wide application of things. So I'm sure the finances will be there once those first projects, demo projects in our countries, and big scale things in Europe and outside. So we're looking forward to it.
Okay, thank you. Well,
Cheryl,
I think
I wanted to mention something which hasn't been said before.
yeah, of
Europe,
course.
so in Europe we have the taxonomy, and the taxonomy hasn't been brought into the discussion yet. And I think that the taxonomy, which has gone operative on the 1st of January, means that the investors will look very closely on where they want to put their money. And I think that the taxonomy will develop the hydrogen market because there is a lot of need for large investments. And the taxonomy goes as deep as if you have a car company which says, well, I want to produce a car which is taxonomy conform, which means that every part of the car, the steel, the seats, everything which is in the car would have to be produced that way, which means that all everybody who's producing something in that chain will say, well, how can I do this? And full electrification of the industrial sector, I think everybody knows that that's just not happening because it's not the technology for most of those productions. So we need to have a combination between the different renewable and decarbonized technologies out there to be able to fulfill the taxonomy. And the taxonomy already has the rules in there. It even has rules for blue hydrogen because they say, well, when you do this with this lower CO2 emissions, you are considered as being sustainable. And that's what I mean with we need those kind of rules to give the investors the security that they will build something that they can sell afterwards. So I think that the taxonomy will be one of those huge pushers of investments for large investors to say, well, this is my safe ground.
I agree, and just maybe to add that we are already looking very carefully as a bank what we are putting in our books, and things like Thomas mentioned and Eva mentioned, just carbon lock-in risk, stranded assets risks. These are becoming very monetary values now that we are very carefully assessing whether to put or not, and what is the horizon for anything to do with carbon lock-in.
Well, okay, I think today's atmosphere is really lively. How about let's just start our Eastern egg round. If you have one question for your today's panel colleagues, what would your question be? Well, let's start with Kajsa. Kajsa, are you still online?
Sorry, yes, I'm online. No, I think this discussion about taxonomy and then delegated act is quite interesting. And obviously, it depends where you're based. And it also depends on where you will land, I would say. Being based in Sweden, where you have a lot of landlocked green electrons available, to not classify that in the future as green, because you have to add new electrons, is going to be a challenge for us. So it's not really a question, it's more a comment to this debate. I mean, we totally support that you need to install new capacity, especially in Central Europe, in South Europe and elsewhere. But it's just, this is a very tricky point that I think needs to be viewed in a very careful way. We are most focused on CO2 emissions and ton or actually kilo of CO2 that you can produce based on our technology per ton of steel. And so that's just a comment from my side, reflecting on what you said, Eva. It is important to guide investors, but it's a bit more tricky than just rely completely on that, I would say.
Okay, thank you for that. And Aida, maybe you have any questions to
not a question, but maybe a call for action to this great panel, which I'm honored to be on, that please do look at the developing world, which does represent opportunities potentially for scale as well, specifically on the renewable side of things, now that Europe, for example, is facing the energy security issues. So Sahara can provide, I mean, if it's a global outlook and if it's all hands on deck, for financiers, for banks, for capital markets, for asset managers. So green hydrogen can really pick up and become moving from words to actual actions and kilograms of green hydrogen. Thank you.
I would add there, Aida, that I think hydrogen is the ultimate egalitarian energy or fuel because it's literally in everything. It's all around us. And, there are many ways to isolate it from the water using, hydropower in Sweden or whatever. And it's also in biomass waste, all sorts of other things, landfill gas, unrecyclable mounds of stuff that are creating a huge waste problem in different parts of the world. Hydrogen's in almost everything. So it's the egalitarian energy and fuel source of the future. No question.
Okay, then Eva,
I would have a question to Aida, because we're looking intensively, not as an investor, but out of interest where the hydrogen is coming from, to Northern Africa and the Sahara region. And one of the questions which is always popping up, especially from the NGOs, is, well, where shall all the water come from? And so I would be interested, yes, of course, desalination plants. What your take is on that question?
Thank you. It's a question we actually discussed at the bank yesterday in the context of one North African countries, which is a big North African country, but which are actively looking at developing both green hydrogen on a large scale and desalination. Mm-hmm. And unfortunately, what we've seen is that those two themes are moving almost in parallel, without sort of cross connection between the two, where we all know that it is indeed that water is a big input. It's a scarce resource, and we have to be mindful of, especially when things are becoming gigawatts of electrolyzer capacity. Yeah. So in that sense, it's both climate mitigation and climate adaptation aspects on our end. Water has to be taken into consideration, and potentially with desal being part of that value chain of providing, of water actually featuring in the hydrogen supply chain. I mean, this is a bit specific to North Africa MENA region, but that's where the scarcest issue is there. The water, that's what the water is the scarcest. Central Asia equally will have to face it, but hopefully there it will be when we start seeing the scale, start seeing the gigawatts. But equally, I mean, it's a great question, Eva, and it's the policymakers and the governments that have to almost marry the two issues together and see them in a complex, not as what we're observing now.
Yeah. Thank you.
Okay, then Thomas, if you have any questions or ideas to add?
I think the only one is a remark. If we speak about taxonomy and sustainability, what was a little bit surprising for us at the end of the year by the European Union, saying that nuclear and natural gas potentially has the potential to being sustainable. So if we look for sustainability, we have to be a little bit broader, not only look for CO2 and CO2 reduction. Then it also goes for next generation looking. And I do believe, this is more a remark, that nuclear is definitely necessary for the transformation of our industry, but it is not sustainable. Thank you.
Okay. Again, thank you for all your sharings. Finally, we have our audience question session. Well, let me check the first question. I think it's for Kajsa. If green steel will be the mainstream or not in terms of quality and economical?
Sorry, I don't know if I completely understood the question. Could you repeat?
If green steel will be mainstream or not in terms of its quality and
No, in terms of quality, we have to deliver the same quality. I mean, the auto industry is extremely cautious on that. So obviously the quality is going to be the same. That's definitely our ambition. If it's mainstream, I mean, it really depends on what you mean by that. We do believe there's going to be an over demand for green steel by 2030 compared to installed capacity. So I mean, when you can buy green steel, or if you as a user can buy a green car, why would you buy a brown one, kind of? But it takes time to transform. So we believe it's not going to be mainstream, maybe from a demand point of view, but not supply.
Okay, thank you. And Thomas, what do you think of telemethopolis that uses much less electricity than electrolysis?
I think we speak about here, there are many ways to produce hydrogen. So we look into these kind of technologies. Very often, we're going to look more from what is the input. Here we look also with regard to waste to energy. This is sometimes very interesting because we have to come into a recycling industry as well. let's say from that point of view, what we don't do is that we start from CH4, that means from natural gas. This is not the starting point for us, but if pyrolysis has a different input factor, which is related to the taxonomy and also to the sustainability and impact focus, that we can do additionally something for the process, then we look into. If it purely comes from natural gas, then it would be not so much pyrolysis of interest for us, even if we know that a couple of projects are going into this direction. But the technology pyrolysis, I think, is more, at least what we have seen, not so common that, for example, alkaline or PEM electrolyzers. But we look into it, and if we have a project available, what we can look into, we can go and look into, but the input is then more, it should come then from a waste-oriented, recycling-oriented philosophy, and not from just using natural gas or coal.
If I may add to this, because we're working on the project.
Yeah,
so the methane pyrolysis, of course, can also take biomethane. And as we have all seen with the new targets that we have in Europe, which makes 10 times more biomethane until the year 2030 compared to today, which means it will depend very much on the region, whether you're going to blend biomethane and hydrogen, or when you have a lot of hydrogen and not that much biomethane, if you have a blend which is 90 hydrogen, 10% biomethane, you could also put the biomethane into the pyrolysis. But I'm absolutely with Thomas. I think that waste to hydrogen is one of those big issues which is coming up. And there's a huge development there all around the world. And this is the great thing about hydrogen. I think every country, every continent is developing something. And when you watch it, every week there is a new process coming out. There is a new technology. Somebody saying they are investing. I've never seen anything like this, not in PV or wind, with the speed how around the world, round the clock, people are developing new things. So the pyrolysis will get there, but it still takes a couple of years.
Okay, Craig, I think you also
I would like to chime in too, from the standpoint of demand scenarios. Back to Eva's comment there in relation to the emergence of many pathways to make hydrogen from all sorts of, especially waste and unused, otherwise unwanted, unused materials. In our view, there are many hydrogen feedstocks that should be viewed as hydrogen reserves. These include municipal waste dumps. These include mounting piles of unrecyclable plastic. It includes all sorts of biomass that today is burned because there's no use for it. These things are hydrogen reserves for future fuel supply. And because, as I said before, because hydrogen is all around us in that fashion, frankly, there's a great opportunity for many different technologies and many different routes to be viable, because hydrogen is not that expensive to make, but to the point that was made earlier about the cost of moving it around, it's incredibly expensive to move. So frankly, we believe that there will be many different successful routes, and a successful route in one location, which could be a city or a municipality or a country in one part of the world, may be very different to a successful route in another part of the world, because these markets are not easily interchangeable. And the cost of moving the hydrogen will have many aspects, and some of those could be carbon related, which will have their own costs that should become direct costs later, which at the moment are not. But we're big fans of any repurposing of unwanted material to turn it into hydrogen as fuel. So we go after any low or negative carbon intensity hydrogen, especially unwanted feedstock, as very, very interesting zero emission fuel in the future for our vehicles.
So, okay, our next questions, I think it's for Aida. As for large-scale funding of new green hydrogen projects, do you currently see any suitable funding options? Well, if the projects with required funding volumes being much larger than like 15 or 20 million euro subsidy limit?
Yeah, I think, well, if we follow the logic of funding large-scale renewables, with an adjustment for the offtake and market risks, but in terms of the hydrogen production, I think there are options for funding large-scale hydrogen production. As I mentioned previously, it's really financing on a project finance non-recourse basis, the renewables part of thing, which is very well known in the industry with our developers, with our clients in our countries. And then sort of interfacing it with the electrolysis part of thing, and then finding the offtake, whether it's green hydrogen or green ammonia. Scale will not be an issue. The question, we would be ready to finance well in excess of $15 million, but it's what would require is a stable regulatory setup in the sense that we know, or the market offtake. The renewable side of things is quite known to us, and we feel comfortable financing large scale renewables. It's just we need to cover the risk, the market risk on the offtake side. But the answer is yes.
Okay, thank you. Then our last question is for Craig. For larger mobility applications, is it rather fuel cells or two engines that will become predominant?
That's a fair question, actually. So if you have hydrogen, then the more efficient way to use it is a fuel cell. So a fuel cell at the location of the reactions inside the fuel cell is around 55 to 60% efficient, electrically efficient, the byproduct being heat. A combustion engine is usually 25 to 30%. So you're getting a lot more bang for your buck if you've got hydrogen already. The reason why hydrogen engines are interesting in the short to medium term, however, is that the cost of producing the engines themselves is quite low because of the massive scale at which they are produced. Over time, as the fuel cells get cheaper to make, then there'll be no great cost advantage in the energy conversion device going from engine to fuel cell. And so therefore there'd be no reason to use a process that's roughly half as efficient in using the hydrogen in the vehicle.
Okay, thank you for our today's really hot atmosphere, and our event is coming to an end here. And thank you to our audience for an hour's company, and we hope today's webinar has provided some inspiration for you. And once again, I would like to thank our fellow speakers for your support and participation. Okay, see you next time.
Thank you, Cheryl.
Bye-bye.
Thank you, Cheryl.
Thank you. Goodbye.
Bye-bye.
Thanks a lot. Bye.